What's going on YouTube? It's your boy Dollar Mike back at it again with another video. If you guys don't know what I do around here, I pretty much make videos talking all about personal finance content. So if you're interested in stuff like that, then make sure you let me know down in the comment section below and make sure you stay tuned for more videos like it. Either way, as you can tell by the title, in today's video we're going to be talking about 7 different places where you can pretty much save your money. 7 different places where you can put your money, where you can make more money from it versus just having it sitting in a traditional banking account, which is still an option. It's just not one of the best options. But I'm not going to waste your time with this video because it should be pretty lengthy, so let's not waste any more time. Like I already mentioned, let's get right into the video. Let's go. Now, when it comes down to this list that I have right here, I ordered them in the order of least risk to greatest risk. So the least risk is pretty much where you won't really lose any money pretty much at all. This is a full-blown savings account. You should be all secured there. The money will be there, but you probably won't make much off of it. To highest risk, where the money is at the highest risk, you can make a lot of money by saving your money in this particular location, but you could also lose most of it or possibly all of it with one of the actual options. So let's not waste any more time. Let's start with the lowest risk first, the one I mentioned in the beginning of the video, which is saving with your traditional bank. Your banks like Bank of America, Wells Fargo, Chase, banks like that. But this is simply your brick and mortar bank. You can walk into this bank. They have actual branches, actual physical locations you can walk into, do whatever you gotta do all your banking needs in this particular bank. But they don't really offer you any type of APY or any type of good yield when it comes to a savings account, and that's pretty much the main reason why you shouldn't save with them. But it does come with slight pros, as your money is more liquid. If you want to go ahead and make withdrawals or transfers, or you need cash quickly, you can go to the bank, grab it real quick, or do whatever you gotta do to get that money right now versus having to wait maybe a couple days, maybe a couple hours is too long for you. Maybe you need that money right now. But regardless, if you're just saving money in these accounts, the APY, the interest yield that you're going to receive every single year, just isn't worth it. Typically with these banks, you're going to get an APY or annual percentage yield. You're going to get an APY of anywhere between nothing pretty much, so they're not going to give you anything for saving money with them, up to 0.05%. Now for me personally, I have Bank of America and I have Chase as well. I know for sure Bank of America gives you a 0.01% APY every single year. So if I have $1,000 saved in my Bank of America savings account, they're going to give me 10 cents for holding that $1,000 the entire year. 10 cents. That's all I'm going to get. It's insane, to be honest. Please, honestly, if you have under $1,000 or something like that, that's perfectly fine. But anytime you're saving a large amount of money, I personally just don't believe you should put it in your traditional bank because you can make more money in other places where it's all passive anyway. So let's talk about some of the other options, and that's pretty much as far as it goes with the traditional banks. So don't do this, don't do this, don't do this. There's way better options that are still low risk that you can make more APY from. Your traditional bank just isn't it. Now, before I even mention the second option, I just want to say that all the banks do is actually use all these other options on this list that I have right here today and pretty much move your savings account money that you actually put into that bank into their own type of savings account so they can make more interest from your money and then go ahead and pretty much make money for themselves and still pay you that 0.01% interest or no interest at all pretty much. So all they're doing is the process that I'm going to show you right here, and it's nothing crazy. It's pretty simple, and you can do it yourself, and you can, like I said before, earn more passive income. So either way, the second option, like I mentioned, is saving with a online banking account. So these online savings accounts are literally no different than your regular bank savings account. It's simply all online. That means you can't go and walk into a physical location because there are no physical locations, but these banks save a lot of money because of that. They don't have to pay their employees, they don't have to pay to buy the building, they don't have to pay rent for the building or do any of that because they don't have to do it because they're only online. But since they're only online, they can give you something great, which is a higher percent APY every single year. So we have banks for this, and some of the banks I can list off that I use personally myself is banks like Ally, Borrow, Yada Savings, SoFi, Betterment, and Wealthfront. If you guys are subscribers of my channel, then you already know I mention Yada Savings often on this channel because I think they're actually one of the best online bank savings accounts pretty much out there. There are other ones that hold a better yield, but I think overall, I think Yada Savings gives you the type of yield that you would need, which isn't anything insane. It's only 0.20 every single year, but they also give you the ability to make money on the money you save, and it's all 100% insured, just like your regular bank would be as well. So personally, I've won over $570 simply saving with Yada Savings, and by saving with Yada Savings, you pretty much win money with them every single week. That money then pretty much just goes into a savings account. Like I said before, it's pretty simple. I have videos all about it, so make sure you check up there, watch the videos talking all about Yada Savings. You'll love those videos. And like I said before, it's a great savings account. But like I said before, also there's other savings accounts that you can use that aren't Yada Savings, where you can still save more than your traditional bank. But typically with these online banks, you can expect a solid APY anywhere between 0.10% and actually 1%. So if you're saving $1,000, that's basically you pretty much getting a passive income of about $1 a year up to about $10 a year. And I don't know why I'm holding two up to about $10 a year, which, like I said before, is better, but it isn't honestly that insane. I mean, $10 a year is cool, but you know, it's not going to break the bank or anything like that. Obviously, the more money you save, the more money you would have in there. That's pretty much how the APY would work. And you guys know the rest. Regardless, let's move on up the list and go on to something that's a little bit more risky, but you can still make a little bit more money as well. So the third option is bonds, and in particular, pretty much bond ETFs. You can go and invest your money into bond ETFs on the stock market. A very, very, very simple process, and you can earn yourself a nice APY and possibly a little bit of market gain if the bonds actually decide to go up in the market, in the stock market as well. So overall, if you want to invest in bond ETFs, you can do that as well. And I have some options right here for you. So I'm gonna get my phone right here, open up the Robinhood app, and I'm gonna show you guys the exact bonds that we can go ahead and look at. So you can invest your money or save your money in short-term or long-term bonds. That's completely up to you. I don't know when you might need this money. You can go ahead and sell it at any time. It's personally up to you. You do have to pay a little bit of taxes if you made money from it, but if you lost money from it, then you wouldn't have to pay taxes at all. You can actually do a tax write-off. Regardless, we got ticker symbol. Let's start with ticker symbol SHY. I believe that is a bond right here. It's a bond ETF. So it says iShares 1 and 3 year Treasury bond ETF. This will probably be one of your safer bets. You can see right here it's sitting at $85.99 a share right now. If we scroll down right now, we can also see a 30-day yield, which is about 0.28%. So this will be your yield for pretty much the year, essentially. This is the 30-day yield. It could change, but overall, let's just say 0.28% is your APY for the year, meaning that you'll pretty much get, what is that, $2.80 for pretty much holding $1,000 of this particular bond every single year. Now, there are other bonds that you can go ahead and invest into that might have a higher yield, but they also come with more risk. Another one is ticker symbol IEF. You can type that in. iShares 7 to 10 year Treasury bond ETF, $115.71 a share right now. We're not really worried about the shares because overall, you're just going to put the money in as your actual savings account. You can see the 30-day yield on this one is 1.38, so a little bit higher, but also a little bit more risk. But like I said before, a little bit more risk when it comes to investing your money. You already know all investing involves some risk, but overall, these bonds are definitely safer than putting your money into Tesla stock, which can go up a lot in one day or down in one day, considering Elon is considering selling 10% of his actual position. But nonetheless, that is an option for you. And if you want the longest option possible, I will go with ticker symbol TLT, which is iShares 20-year plus year Treasury bond ETF, sitting at $149.24 a share right now. We scroll down, they have a dividend yield of pretty much 1.87%, which is essentially $10.80 or something like that a year, pretty much. So yeah, there you guys go. That is other options as far as a little bit of risk, like a slight amount of risk, but you also do get a higher yield. And like I said before, we're gonna keep going up on this list. The more risk, the more reward. You guys know the deal. There you guys go. But as far as bonds and bond ETFs go, you can expect anywhere between a 0.25% APY up to a 2% APY every single year. The next couple of options are also investments that you could do on the stock market very simply by buying the stock of however much money you want to put in that particular stock for your actual savings account. You can look at it as a savings account. It is an investment, and you'll make money from it, and you'll also collect a dividend from it, which is pretty much the same exact thing as the APY that you would see. Regardless, you can invest your money into high yield dividend stocks, or you can invest your money into a dividend ETF. I put this into one category because it's pretty much the same thing. A dividend stock is going to pay you out every single month, every single quarter. Maybe it's semi-annually, which is 2 times a year, or annually, which is only 1 time a year. But regardless, you're going to get paid out from that high-yielding dividend stock if you wish to be invested in some of those dividend stocks. You can also go with a dividend ETF, which is simply a whole bunch of dividend stocks put into one single stock, and they pay you a yield that way. Personally up to you, and I have recommendations for you. So you can invest your money into some great companies like 3M. You can also invest your money into ticker symbol EMR or Emerson, or you can invest your money into ticker symbol KO or Coke. It's personally up to you. And if you don't want to do that, there are plenty of other dividend stock videos, plenty of other content talking about dividends on YouTube and on my channel as well. So definitely stay tuned and look around on my channel. You'll see tons of content that will offer you a higher dividend yield or a lower dividend yield. But overall, typically speaking, the higher dividend yield, the more risk you're taking with your money. And that's personally up to you. Regardless, when it comes to dividend ETFs, some of the great ones that I like to look at is ticker symbol DGRO and ticker symbol SCHD. Personally, up to you which one you want to be invested in. I think they're both great. But if you want to take a little bit more risk, then ticker symbol QYLD is there for you as well. All options, all talked about on the channel before, so make sure you check those videos out and you will learn all about them. Especially if you're not into investing, you're already in the right place. Since we're investing now, you guys automatically know that this is subject to market fluctuations. So the stock price of the stock that you buy when it comes to bonds or when it comes to dividend stocks or a dividend ETF, the stock price of that stock could go up or it could go down. So you can make more money on top of what you're already making on APY, or you could actually end up losing a little bit of money as well. So like I said, you got to do what you got to do. Find which risk works best for you, especially with your money. If this is a short-term or long-term type of savings account, personally up to you. If it's long-term, then you do one thing. If it's short-term, you do another thing. Personally up to you. I can't tell you what exactly to invest in, but I can give you the tools and the research and whatever if you guys need that. So if you're looking for an APY when it comes to a high-yield dividend stock or a dividend ETF, you can pretty much expect anywhere between a 2% APY and a 25% APY every single year. Yes, 25% APY. So 25% of your money pretty much can pretty much come from dividend and be passive income. But how much risk are you really putting up to get that 25% APY? I'm not sure. It's completely up to you, just like it's completely up to me. Do what you gotta do and you'll be all good to go. If you guys haven't seen my personal Robinhood portfolio videos, you should definitely check that out. I earn a little bit over $900 in passive income every single year, and that's consistently growing just from holding dividend stocks as well as just growth stocks as well. But typically, growth stocks don't really give you any interest at all, like Tesla. They're not there to give you a dividend. They're there to put all that money they got extra back into the company to overall better themselves and pretty much make the stock price go up as well. And, you know, that's pretty much how it works. Regardless, though, over $900 right now in passive income when it comes to the dividend stocks I hold in my portfolio. So if you want to check that out, video will be right up there. The fifth option that I have for you guys today is putting your money or putting your savings into a mixed portfolio of stocks and bonds. That's personally up to you on how you actually want to set that up. But if you don't want to set up yourself and you want it to be more of a passive thing where you just put it away and you know it's pretty much it's definitely insured, but you put it away and you don't really have to worry about it, and if you need to take the money out, you can take the money out, then I would recommend platforms like Betterment, Wealthfront, Titan, and Acorns. They'll invest your money or savings on your behalf into the stock market, into stocks or bonds. Personally, up to you. It comes down to what type of answers you give to the questions they ask you when you go and sign up for your account. They'll ask you about your time horizon, like when you need this money, stuff like that. They'll also ask you about how much risk you're willing to take, and then they'll provide you with a recommendation portfolio, which you can personally make your own, or you can go ahead and you know, use their recommendation. Overall, I have the Acorns platform, I have the Titan platform. I make videos about both of those. I use Wealthfront every now and then, but overall I haven't used it in a while. And Betterment is a nice platform as well. Haven't made a video on it, but it is coming soon. Regardless, they're all great platforms to help you go ahead and invest your money if you really don't know anything about investing. They do come with a very small fee, most of them, but overall, if you don't know anything about investing and you want to get started, you can start here and then move on over. When I first started investing, I actually started with Acorns, and now I pretty much manage my own portfolio because I know what I'm doing and I had the time to actually go ahead and take care of it and manage it myself. Either way, if you want to go ahead and sign up for one of these, the links will be down below for pretty much everything that I mentioned in today's video. Typically with these though, you're not going to get a super high interest rate, but I would say you can expect anywhere between 2.5 to 5% as an APY every single year. Plus, you'll have to deal with those market fluctuations if they happen. We don't know what's going to happen in the future when it comes to the stock market, when it comes to the world. So it's something you have to deal with. And of course, there's a little bit of risk here as well. All investing involves risk. Now, the sixth option is a very interesting one because it didn't exist a couple of years ago. And I already know some of the comments. Honestly, the comments already know how this is going to go. Probably going to get some spam and probably going to get some people like, this is crazy, you should never do this. But regardless, it is an option if you want to do it, and that is cryptocurrency. And in cryptocurrency in particular, we're talking about stablecoins. So before I even jump into it, just want to mention that cryptocurrency is an extremely high risk way for you to pretty much save your money. Stablecoins is still high risk. I would say it's probably the highest risk. It's definitely the highest risk on this list today. So definitely, if you're willing, if you're up for it, then sure. If you're not, then definitely do not do this, especially if you don't know what you're doing at all. But what exactly is a cryptocurrency stablecoins? Because we all know Bitcoin, we all know Ethereum, we know Doge, we know coins like that, but those coins move up and down. Prices change all the time. Dogecoin might be up, Bitcoin's up $30,000 in a matter of a couple months. We're not talking about that. We're talking about stable coins. and this is what they are. A stablecoin is a type of cryptocurrency whose value is pegged to another asset, typically the US dollar. Also, when it comes to cryptocurrency as a whole, your money is not insured. Everything else I've talked about on this list today, your money is FDIC insured or SPIC insured. So overall, if you end up losing your money, you'll get it back one way or another. With cryptocurrency, if you lose your money, that's it. It's not insured, so you will not get your money back. You send your money to the wrong wallet, something like that, it's it. That's gone. You're done. That's it. So regardless, make sure you pay close attention to all this kind of stuff when you're messing with cryptocurrency. But I'm sure if you are messing with cryptocurrency, then you probably already know this. When it comes to a stable coin, it is slightly insured, but I would honestly just check with my crypto exchange. And even then, I would still be just a little bit wary that it might not be 100% insured just in case you were to lose some of that money. According to bankrate.com, 76% of insurance is a cash or cash equivalent. In this type of situation, the exchange would have something like corporate debt. 13% of your crypto is in crypto loans, and about 10% of the crypto could be in corporate bonds, funds, or precious metals. Overall, equaling up to about 99%, because that 1% is still not there. Your money is not 100% secure when it comes to cryptocurrency or cryptocurrency stablecoins. Now, I definitely want to make sure I preach this. This is the riskiest place to store your savings, but you can also make a lot of yield when it comes to an APY every single year. I've personally done it myself and still do it to this day, and I have had zero issues so far on apps like BlockFi, Coinbase, Gemini, and Crypto.com. And I've also made videos talking about all these different type of platforms, all these different exchanges. So if you want to check those videos out, it'll be linked up there. Overall, you can expect the APY anywhere between 4% and 20%. There's no market fluctuation since cryptocurrency stablecoins are essentially a stablecoin, so they don't change. They pretty much stay $1 or whatever the actual asset is pegged to. Pretty much $1 though. It's usually always $1. But like I said before, your money is not 100% insured, so it's completely up to you whether you want to take that type of risk on or not. But like I said before, I've done it, haven't had any issues. Knock on wood, you never know what happens. But regardless, I wouldn't put your life savings in this because that just wouldn't make much sense. But do what you gotta do. If you want to get some APY real quick for a year, it might work out for you. And there you guys go. And the last option for you guys today is the bank once again, but not you going to the bank. You're actually the bank. So there you guys go. It is peer-to-peer lending. Well, basically what you're going to do is lend your money out to peers, friends, or whoever, and then you sign an agreement or whatever, they sign an agreement, all that kind of good stuff. And when you actually get the money back, you actually get more money back than you actually gave them originally. Essentially them just paying you interest. So for example, one of your friends needs to borrow $100. You let them go ahead and borrow that $100. Then he goes ahead or she goes ahead and pays you back when their payday comes around 2 weeks from now, and they pay you back $105. So there you guys go. You made $5 in a matter of 2 weeks. Overall, way more than you will make from a traditional bank account, and likely way more than you would make from some of the other options on this list that I mentioned before, like an online bank account as well, where you're probably not going to make as much, but it's still more than normal depending on how much you're actually saving. But for $100, that's a pretty solid return. Now, for a couple thousand, and you're getting $5 back, that's pretty much not that good, So obviously you can scale it to whatever you need to scale it to. You can have your own interest rate and you can set your own levels of risk because you are the bank. So you decide who you're going to give the money out to. Now, $100 might not be that big of a deal, but if you're lending someone a couple of thousand, then I would definitely make sure you guys got some type of written agreement, some contract signed, even if that is one of your friends. That's a lot of money. And honestly, letting people borrow money, it's like an 80% for me. It's like I don't really expect to get it back, but I would like it back because I did let you borrow money and it is my money. You see what I'm saying? So overall, do what you got to do. If you're going to let people borrow thousands upon thousands of dollars, definitely make sure you have some type of written agreement. So in all, if you have to go to court to get your money back, then you have to go to court to get your money back. That would suck because it could mess up your relationship, blah, blah, blah. You guys already know the deal, but people do this all the time. So there you guys go. That is an option if you want to do that, and that makes yourself the bank. So, just on a smaller scale, of course, because you don't have $100 million in assets to go and be the bank. But, it is what it is. Maybe you can work your way up to that. I don't know. Let me know down in the comment section below. So that is it for today's video. I hope you guys enjoyed. I hope I provided you with some solid information as far as where you could put your money besides a general basic savings account that doesn't earn you pretty much anything. So if you enjoyed this video, make sure you hit it with a like button. Make sure you subscribe to see more videos like this on more personal finance content. Make sure you check out the links down below. The links down below will get you tons of free stuff when it comes to saving money, cryptocurrency, the stock market, all that good stuff, all linked down below for you. Check out some of my previous videos if you haven't seen my channel before. And if you have, thank you very much for being a returner. viewer and a returner subscriber as well. So that's pretty much it. If you want to grab yourself some t-shirts, some merch, the website is all up. It's live right now, dollarmike.co. Check out the Patreon to support the channel even further if you want to do that. And the Discord, which I haven't really been in that much, and that's probably the only thing I haven't need to catch back up on. Haven't done that, but I'm going to get back in the Discord. So eventually, once everything settles, I'll be back in the Discord. I didn't leave the Discord. It's not abandoned. The Discord's free anyway, so I'm not going to charge anybody to be in the Discord. That's ridiculous. But yeah, that's pretty much it, though. So thank you guys for watching. I know it was a long video, but it was a lot of information. So I'm out. Take care of yourselves. Stay safe. Stay hydrated. Dollar Mike. Peace.